Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY report for Monday, February 7th, 2022. Before we look at the charts, I just want to encourage you to please click like each and every time you watch the Daily SPY report or any content that Wicked Stocks uploads to its YouTube channel. And that helps us out a great deal in being found. The more likes you get, those algorithms kick in, and you wind up showing up on the initial searches oftentimes for SPY analysis or S&P 500 analysis. And subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the Daily SPY report. And so seeing it early before the opening bell is important for your trading and analysis. Let's take a look at the charts. Just the weekly chart to begin with. It's important to show that after having settled below this channel bottom at 446.47 this week for 2 weeks in a row, we settled back above it. We also closed above the high of the low at 444.04. So this is an important development. It may actually result, as we look back over the next couple of months, in a bullish continuation to new highs and even that 497.41 long-term trend line across those highs that we tested a lot last year, September, and then again in November and December, we rallied to within 1% of it. And so it may actually be in reach, but we're not out of the woods yet. And I say that because not only do we have decent near to midterm resistance at 440 or 458.47. You're familiar with that channel bottom. There's also a descending channel top at 461.62. So not only do we need to get up and over that, but I say that we're not out of the woods yet because of the triple Q. The triple Q is sort of in its own little world, so to speak. It's sold off in more dramatic fashion during the month of January, and it is merely retracing or attempting to retrace back to long-term resistance, presently at 375.60. So I characterize the triple Q as being on the defensive into later February below 375.60, and if it does fall all the way down to 326.84, which I am anticipating in the weeks ahead, I think that is still in reach, then it will obviously drag the SPY with it to the downside. So there's that. Let's take a look at kind of the nearer term picture. I'll open the charts up just a little bit, and you can see that long-term channel bottom we settled above early last week. I think that was Monday of last week. It held nicely on Friday. We got a nice bounce off of that late in the day. And so it is there as our weekly support, and we should, over the next few days, retest 458.47, which once again is the start of a narrowing range of resistance up to 461.62 that can contain weekly buying pressures. I characterize both of those levels as the same right now. I don't really want to call 444.36 multi-week support that could contain selling into Q2. That may well be what happens, but right now it's more of a ping pong game, if you will. Downside 444.36, upside 458.47. We could trade inside this area through the week still, and if we settle outside them, then I think the market is sort of tipping its hand. Let's take a look at the support and resistance for today. You can see the 444.36 long-term channel bottom there is a 3-star weekly support level, above which 458.47 is in reach over the next few days. Upside today, we have 452.66, which is our soft pivot point for the day, below which 444.36 remains in reach today. But if we push or open today above 452.66, we can reach 458.47 on an intraday basis, which once again is the start of a narrowing zone of resistance. I say narrowing because 458.47 is rising ever so gradually, and 461.62 is actually dropping at a pretty decent pace. And so that area, roughly a 3-point range, can contain weekly buying pressures, and from there we can fall back to 444.36 within the week. But if we close above 461.62, I think we've got that good low for the quarter, and we should reach 479.98 within 2 or 3 weeks, and 496.15 in reach over the next, 2 to 3 months. Depends on what happens at 479.98. Do we double top there in a meaningful way for weeks on end? That may well be what plays out. But after the big sell signal, earlier in January, below that 446 47 weekly channel bottom. I'm kind of fumbling here. It's really the daily chart I want to show you. 444.36. After having settled below it, and eliciting kind of a meaningful midterm sell signal into the low 400 area, which has obviously not happened, and then closing above that 458.47 to 62 and change area. I think, yeah, we could double top at 479 and change, but it really is, I think, 496.15 that I think you should allow for by the end of Q2 anyway, and quite possibly much sooner than that. And so I'll just put that out there. So let's take a look at 444.36 today, because we could break that. We might even open below it. Who knows? And if we do, then 438.59 is in reach today. And that, once again, I think I showed this last week. Breaking 444.36 is a rising two-thirds speed line at 438.59. It becomes an intraday target. We could get a nice bounce there for the day, maybe even close above 444.36 at the end of the day. But it is the settlement on an intra-week downside signal basis. It is the settlement below 438.59, I think, that then yields follow-through selling. And under that scenario, I think we should reach the 420.76 low from a couple of weeks ago within several days, and then ultimately closing below the 438.59 speed line. I think this sets the market up for obviously then closing the week below 444.36, and over the next as little as 2 to 3 weeks, but it could be 3 to 5. The timing is like next to impossible, but I do think volatility will expand yet again, and we should then fall into the 399.18 to 401.73 area, where the market finds meaningful support, able to contain selling through the year. I mean, this chart says a lot. Long term, in terms of the 2-year time frame that you see here, this market remains bullish, clearly above 401.73. It's just that it enters kind of a near to midterm bear phase again if we settle back below that 444.36 channel bottom. And once again, I want to emphasize it really is 438.59 this week and rising daily that we have our downward pivot point where we can get aggressive selling into later week if we close below it. But until then, I think we've got a floor of support at 444.36, and we have a ceiling of resistance in the 458.47 to 61.62 area. And I'll just leave it at that. I'll leave you with the support and resistance for today. I think I've said it all. And please click like if you haven't already, and subscribe to the Wicked Stocks YouTube channel. You won't regret it. I'll be back tomorrow for Tuesday's Daily SPY Report. You have a great day, and we will talk soon.